Welcome, Matthew. So nice to meet you. I've known Alison for years, as you probably know, and she's a great gal and really, I haven't seen her for a long while, so it's wonderful to meet you. I know you guys have got beautiful children. How many?
5 kids, and Alison is my wife for our audience.
Fantastic. That's so fantastic.
Yeah.
So tell me, could you tell me a bit about what you're really passionate about as far as investing and what companies possibly that you have invested in as a result of that?
Thanks, Pima. So I wear 2 hats. I help run Keiretsu, which is the most active technology venture investor in America. We back about 200 companies per year, and they're across all segments, all technologies, all segments, all marketplaces. So I would be hard pushed to pull out one as being something of particular focus for Keiretsu. In fact, we're about 40% IT, 30% life sciences, 30% everything else, clean tech, fintech, real estate tech, and so on. For myself, my wife and I, Alison, also have our own family office, Fifth Era, and we also do early stage technology investing through that vehicle. And there we focus on digital content, electronic commerce, and fintech. And so I would say those are the 3 areas within that investment vehicle. But for Keiretsu, it's everything.
And what's your passion? Like, what fires you up as soon as you hear about a startup in a certain domain?
Well, I think broadly speaking, I'm very excited by using innovation and technology to change industries, make them more efficient, more effective, figure out how we can help consumers solve problems that historically perhaps we haven't been able to get to. And that could be both in terms of fundamental needs, health, well-being, food, education, but it could also be around, if you will, more discretionary needs. How do we go about just meeting our utility function more efficiently by using technology to do so?
That's very practical. I appreciate that. And I was wondering if you have an interesting story about being an investor. I know it's such a stressful, complex business to be in, and sometimes some of the investors tell me some very light-hearted stories or some unusual, interesting stories.
Yes, well, I think that Mike Moritz is a good friend over at Sequoia, and I've heard him say a number of times that the most interesting stories tend to be the ones you don't invest in, and then you look back later and realize that you made a mistake. And in fact, he says he loses more sleep on the companies he didn't invest in that go on to do great things than on the ones that he did invest in. And that's very true for Alison and I. We were early investors in a New Zealand-led company called Dispatch Management Systems. They rolled up, or were in the process of rolling up, the courier industry on some unique technology back in about 2000, 2001. And they IPO'd, but they didn't make a success of it. And one of their most junior developers was someone called Dorsey, who basically saw how to instantly message through the couriering platform, went away and created Twitter. And, we were this close, but we weren't investors in Twitter. We were investors in the predecessor. And it's stories like that that sort of make you continue to fish in the pond looking for the next big opportunity. And we've been fortunate to get more than our fair share. But I think most investors in this environment are looking for those once-in-a-lifetime opportunities.
And I know the money is what obviously most investors are after, but some of the human stories are quite amazing. What you've just shared with me, incredible, really, that you actually had invested in Jack Dorsey before he was Jack Dorsey, really, before Twitter and Square. So I think that's really the really significant things. I think when we're on the deathbed, like, what really counts? The money, we can't take it with us, but I think the impact we've had on human beings can be really profound, and it sounds like you guys are doing that.
Yes, we have about 3,500 angels within our organization, Keiretsu, and I tend to think of them as falling into different categories, and different people are in different categories at different times. There are people who are very financially oriented, and at some time that may be the primary reason that they're investing. There are people, frequently entrepreneurs themselves, in their past. They've been successful, and now they want to give back sort of time and energy into younger entrepreneurs, helping them also bringing capital to the table, but bringing expertise and knowledge, relationships, and so on. And then without question, many of us are mission-oriented at some point in time. So, for example, our largest round last year was a $10 million round for a life sciences company, and it got that much money, I think, because it tapped in to sort of a mission. It was a focus on an orphan disease state that children suffer, and it was a drug that would help mitigate that. And there was I could see in the room, and as the company went out and raised that 10 million, it was tapping into more of a mission which was half philanthropic and half, we really need to help with this issue. So, and then, like I say, different people move in and out. So you'll see they wear different hats at different times. They're all highly affluent people, and they can do philanthropy if they wish, or they can invest it in companies. The key point of that is entrepreneurs need to figure out which mode they want to interact with the investors in, and make sure the investor is tuned in. Because there's no point in doing a mission-based pitch to someone that's sitting there and is only focused on financial return at that moment in time, and vice versa. We definitely encourage entrepreneurs to make sure the story they're telling is resonating with the investors they're speaking to, and that match is not always as obvious as it might seem.
Profound wisdom. Thank you so much, Matthew. I really appreciate it. And I'm so looking forward to the chat tonight.
Okay, good. I'm looking forward to it too.